Are you feeling overwhelmed, anxious about wash sales and their potentially disastrous effects? You might feel like you're trying to navigate through a field of icebergs with unseen catastrophe lurking below the surface. Have no fear. Thousands of traders have learned to take control of wash sales and avoid disaster, and you can too. Hello again. I'm Jason with TradeLog. Welcome to the final video of our 4-part series on understanding wash sales. Our prior videos explained wash sales, the IRS rules, and the effects they can have on traders. Now, let's talk about how you can take control of potentially harmful wash sale situations. If you are actively trading, then wash sales are likely inevitable. But as I explained in the last video, this doesn't mean you need to panic or try to avoid every wash sale. As a quick review, there are 2 potential dangers to watch for. IRA wash sales, which may permanently disallow losses, and wash sale loss deferrals at year-end, which may increase taxable gains. Let's talk about timing. When do you need to be alert to these dangers? IRA wash sales are always high risk. If you choose to trade the same securities in your taxable account and in an IRA, you'll need to beware constantly. Later, I'll show you how you may be able to mitigate IRA wash sales. But you may choose not to take this risk and simply avoid trading the same securities in both accounts, at least during the same time periods. Now, for the majority of traders, if IRA wash sales are not a risk for you, then most of the year you can focus on making winning trades. But in December and January, you should really examine any wash sale effects on your taxable bottom line. Why then? In December, you may have wash sale deferrals that are attached to positions still open. If you don't close those positions by December 31st, then the losses are deferred to the next tax year, increasing taxable gains. Depending on your net situation, this may or may not hurt you. Let's look at a few examples. First, we have Julian. He has a realized net loss of $26,400. However, there are $12,000 in wash sales that are attached to shares still open. This increases gains, and so the taxable loss stands at $14,400. Julian isn't paying taxes on capital losses, so he may not take any action. On the other hand, Maria has a realized net gain of $68,200. She also has $12,000 in wash sales attached to shares still open. This results in an increased taxable gain of $80,200. Maria may not like paying taxes on money she didn't make, so she could try to do something before the year is over. Then there's Corey. His wash sales are putting him upside down. Even though he realized a net loss of $5,600, the $12,000 in wash sale deferrals are leaving him with a taxable gain of $6,400. He would probably like to avoid that also. So what can you do in December to control harmful wash sale deferrals? Closing some of those open positions could capture losses in the current tax year. You may not need to close them all. In fact, some smart traders will carefully close just enough positions to eliminate taxable gains if possible, or perhaps to claim their max loss of $3,000. Then they keep the remaining positions open and intentionally defer some losses, which could offset gains in the next year. Maria likely wants to capture as many losses as possible to reduce her taxable gain, but Corey may try to capture around $9,400 of his losses, just enough to get him to the max capital loss allowed for the year. Another thing to be mindful of in December are any new losses you make. If you incur a large loss and then replace that position before the end of the year, you may trigger a new wash sale, which could defer the loss, creating the same situations we just discussed. Many traders are extra cautious about incurring losses in December for that reason. The same is also true for the month of January. Once you get to January 1, the tax year is over, but you're not yet out of the wash sale danger zone. Remember, the wash sale window extends 30 days after a loss occurs, and that might be into January of the next year. For example, if you have a loss on 100 Tesla shares sold in December, say on the 18th, then purchasing up to 100 shares as late as January 17th could trigger a wash sale. And the result would defer that loss to the next tax year or whenever you close out the replacement. Because the prior tax year is over, you can't do anything to change that. Once again, this isn't always a bad thing, but if the wash sale adjustment increases your tax liability, then you may consider waiting until 31 days after the loss before making a replacement trade. Now, some traders choose to stop trading completely for a 31-day period at the end of the year to avoid any wash sales. Should you do that? There are pros and cons to the strategy. Some take that time off for vacation, holidays, travel. On the other hand, you could miss out on winning opportunities depending on what you're trading. No matter what you decide, keep in mind, even if you stop trading for a whole month, if you have any holdings open there could be wash sale deferrals attached to those holdings. So it's important to know where you stand and take control of your wash sales. Controlling these situations may seem impossible. Likely, you're aware that many brokers don't provide details about year-to-date wash sale adjustments. They also aren't required to make all the wash sale adjustments the IRS requires of you as a taxpayer. And so, using broker reporting just may not work for controlling wash sales. This is where traders use the trade log application to understand and control wash sale effects. TradeLog allows you to import trade history for all your brokerage accounts, taxable and non-taxable. The resulting reporting provides a complete picture of IRS-compliant wash sale adjustments and the effects on your bottom line. Let me show you how that works. First, you make sure to import all trade history up to date for the year. Now, from the All Accounts tab, you run the Gains and Losses report to view your year-to-date taxable gain or loss. You'll also see the total amount of wash sales being deferred and the amount permanently disallowed from IRA wash sales. This can help you determine if you need to take any action. Once you know where you stand, if you realize you need to do something, you can run the Potential Wash Sale Report. Section 1 of this report lists your open positions that have wash sale deferrals attached to them. If you close out any of these positions before the end of the year, you can capture some of the losses. This is an important section to use in December. For example, this report shows $13,000 in losses attached to shares of Tesla owned. Selling some of these shares will allow us to reduce taxable gains. Section 2 is different. This lists all of the trades that closed at a loss within the last 30 days. If you create a replacement position for any of these, then it may defer more losses. You'll notice the plus 30 days column tells you the last day of the wash sale window. This section is helpful during December and January to avoid new wash sale deferrals. So, for example, we are at risk of creating a new wash sale if we open a position on Apple before January 8th. Do we have to stop trading Apple? We might. Of course, we don't want to miss out on profitable opportunities. The key is, this section gives the information so we know the risks and can make strategic decisions to navigate those. Section 3 of this report shows any IRA wash sales that you may be able to reverse. Wait, did I say that correctly? Yes, you may be able to reverse an IRA wash sale adjustment in TradeLog, but you have to act fast. Here's how this works. TradeLog will only adjust a wash sale to an IRA trade if it has no other choice. The intelligence will always try to find a replacement to adjust in a taxable account first, which is logical. Notice our NVIDIA trades in this example. We made the mistake of buying shares in our IRA, which triggered a wash sale. If we don't do something before December 28th, we'll permanently disallow $1,600. But if I go into my taxable account and create another replacement position equal to at least 80 shares, then TradeLog will adjust the wash sale to the taxable account replacement instead of that in the IRA. Now, I still have a wash sale, but it's only deferred, not permanently disallowed. So when I sell those 80 replacement shares, hopefully at a profit, then the loss will be realized at that time. If you are trading in your IRA and taxable account, this is an important strategy to know. But we have to do this before the 30-day window runs out. After that, the losses are permanently disallowed with no recourse. If you want to learn more about using each section of this report, just click on the additional information links. We give example scenarios on our website that will help you make decisions. How often do you need to run the potential wash sale report? Again, that depends on your trading activity and the effects wash sales are having. So let's recap. If you're trading the same securities in your IRA and taxable accounts, then you need to be aware of IRA wash sales all year long. Using a tool like TradeLog, you may be able to avoid permanently disallowed losses, but I can't stress enough, this requires constant vigilance and action. If you aren't up for that, then you might want to trade different securities in your IRA. For the majority of active traders, typical wash sales may be inevitable through the year, but in December and January, you should know where you stand, how your wash sales are affecting your taxable bottom line. TradeLog helps you see that, and if wash sale deferrals are increasing your tax liability, then you may be able to take action to capture more losses before December 31. And you can also carefully avoid creating new deferrals through January. We hope you benefited from this 4-part series. If you did, please give this video a thumbs up. Our website at tradelog.com has an education section filled with information to help you understand trader taxes and more. You can learn about Form 8949, 1099-B, find out how trader tax status can help qualified traders eliminate wash sales completely, and so much more. And did you know you can start using TradeLog free for 30 days? You can go ahead and import all your trade history, preview wash sale effects, and even use the potential wash sale report all for free. Before leaving, make sure you're subscribed to our channel. We'll keep posting more content about trader taxes, using TradeLog, and becoming a more successful trader. Thanks again for watching. I'll see you next time.